Welcome to my daily channel. Today we're going to go from our 11,000 stocks that we've whittled down to just 94, so about 1%, and we're going to go further on those. So the goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, sharing the lessons along the way. This is my investing process. So today we're going to go up from our all publicly available stocks. We'll go down to where we're going to scout for prey. I'll show you where I'm looking for those high quality stocks that are going to compound and be nice long-term holds. We won't be getting up to the separate from the herd, so the 5-minute check on each one, but we will be looking at a kind of one in between those. So there's something that's very important to this process as well. Now, I've taken this strategy from these guys. They did pretty well for themselves over just a little while, and by following the breadcrumbs they've left behind, should be able to follow in their footsteps. Now, if you'd like all the resources that I'm using to come up with these stocks for free, there's the link in the description. You can jump on that. It's my gift to you guys. Otherwise, let's get into it. So I'm using a free screener tool, which is FinViz, so that you guys can just see that you don't need to be fancy with this stuff. You can just jump straight in and have a play yourself and start looking for exceptional stocks. Now, it's not a magic looking around for these, it's science, and there is strategy behind it. So we're going to go from a free version that's available. You get all the US stocks on the NASDAQ and NYSE, and potentially a couple other little ones. Looking around 11,600 stocks in total, with a couple of the filters that we've got on at the moment, which are key for, I guess, long-term growing companies. We really want to look for things that are going to be early in their life, as well as businesses that are larger as well, but are still proving themselves long-term. So I've got sales growth past 5 years, net profit margin over 10%, and return on invested capital over 10% as well. And these are a snapshot in time. So they won't, say for instance, if a company's been doing really well for 5 years, and then all of a sudden they have a bad year, they will drop off this list. Now, that's why we need to continuously check these out every few months to a year as we go along, just to see what else falls into our basket. Now, we've gone from our 11,600 down to 94, which is slightly less than 1%. So these should be exceptional stocks, and I'm pretty sure we're going to find some pretty well-known companies in here as well. So what I have done though is I've taken away our market cap restriction. It's made it grow from 66 stocks up to 94, which is a small increase. And so I'm willing to go and have a look at those ones as well. So that allows me to have some large businesses as well to keep an eye on for when they drop below value, and some much smaller companies that have potentially a lot more of a runway in front of them over the long term. Today, what I'm going to do is I'm going to go through each one of these bad boys, and we'll see if we can get through our list of 94. We might get through half today. And really, the filter that I'm looking for is consistency. Now, consistency means a lot, and I'm not worrying about the price. Price doesn't matter. Over time, there's a lot of things involved in that, but that's a secondary response to the value of the business. So what I am looking for is I want to see our net income increasing. I want to see sales increasing, which is the upstream marker of the business. And then I also want to see that shares outstanding is either slowly reducing so that they've got share buybacks, or that it's steady and it's not, the business isn't being funded by growing more shares. All right. Now, what this should do for us is a couple of things. But for instance, if we're looking at this business, see sales, nice trajectory there, like a nice amount of growth. However, earnings isn't really growing. Shares has remained pretty constant the last couple of years, And if anything, they're starting to decrease. So if this business, I really need to hold the line for what excellence is. Otherwise, I'll just be looking at way too many stocks. And I can come back to these ones in the future and go back through the list. So ADMA doesn't make the cut. Let's go to our next one. So this is a bit more interesting. We've still got increasing. We've got net incomes increasing. But I can see it's got the word mines in it. Now our shares outstanding are pretty constant of late. But mining can be, which it's got gold here, which this net income, a lot of mining companies and things it's a cyclical industry. So I really need to come up with the line for, I'm putting this one off to the side because it's really just riding the huge giant increase in gold pricing. Now, I will keep it off to the side. I can see that it's on the NYSE. So I'm just going to add its ticker to the side to come back to, and I'll put a little comment, just gold resources. But overall, it does look like it's got the right trends. However, I've got a sneaking suspicion it's not going to be what I'm after long term. An interesting stock. Gone down the gurgler. So this is what I'm talking about. It might meet the filter, but we can see here that earnings, net income has been erratic, and sales has been all over the shop as well, and shares outstanding has as well. So not interested, move on. AGNC Investment Corp. All right, so we can see that shares outstanding has been increasing. Sales has been pretty lumpy. What are these guys up to? REIT, it's a mortgage. Okay, real estate, US, large cap. You have to go. I'm not really interested at this point. Shares outstanding is obviously increasing, and what I'm looking for, like I said, is consistency above all. The reason for that is being able to predict what the future of the business is going to do is very critical to our success as investors. And if you're finding businesses that are less consistent, it's going to be more risk involved, and it'll be harder to picture where the business is going to be in the future. So for this one, Allan Mecham, we can see that sales has been increasing consistently. The shares outstanding is kind of flattening off. Like, they're not increasing it a lot, and it's starting to taper off. But we can also see that they've had losses, and now they're starting to have gains. So let's see. It's actually a large cap. Very interesting. So I'm going to put this one off to our side to have a look at. It's on the NASDAQ. And ALNY. All right. So all I want to do is filter through these using a very responsible filter. And yeah, this is nice. All right. So very consistent sales growth, very consistent earnings growth, which is our net income growth. And then shares outstanding is super flat. So what do these guys do? Computer hardware. USA, it's pretty big. Big stock. NYSE. And net. Cool. That's another one on our list. Now, where are we at? App Lovin' Corp. I think one of my favourite movies is still Superbad. So, although this one's had a weird kind of turnaround. So, this is pretty short term. We've got a general trend, for the last 3 years. Now, I don't want to just drop this off because this is fairly consistent. Pardon me. So I'm going to add this one to our list, It's on the NASDAQ, and it is app. Nice, Gary. All right, what do we got next? Argenx Biotech Netherlands. All right. So another nice one. So it's really helpful for our screen. If the business wasn't making a net income and we were back here, so in previous years when they were making a loss, it wouldn't show up on our screen. So it gets rid of all these businesses that are quite speculative. People are hoping that the business is going to be able to turn around and start to make some significant growth. And so what we can see here is, yeah, business is starting to take off. So, and we can see that shares outstanding is starting to flatten off. So it means that the business doesn't really need to continue to pay out those shares in order to maintain the float of the business, or keep it afloat, sorry, so that it can be financed by it. So even though it's just got a last couple of years, it's still something worth having a sticky beak at. Now, with this huge uptick in the gold price in the last few years, some of these ones are going to get added onto it. And so I'm going to add these just together next to that previous one. We can see that shares outstanding has been increasing. So I'm not really keen on that. Sales is obviously increasing, and so is earnings per share. But like I said, that can be all propped up because the price of gold's, 3x'd in the last 5 years or more. I don't really follow the commodities all that much. It is an interesting play though. So for me, yeah, I'll add it to the list, but I'm not all that excited about them. So that we've got a gold, silver. All right, back to our screener. What else we got? Ascendus Pharma. Ooh wee. Okay. So we've got sales increasing rapidly. We've got profitability tabled for this year. You can see that the trend over the last 4 years is that the loss is decreasing. So over that time, if we look at the reports, we should be able to see revenues slowly increasing, but still not able to get rid of that net income. And I'd say this is fairly steady. It still looks like it's had some shares outstanding, sold recently. And that may be to do with the business trying to focus on a lot more growth. So I'm going to put this one down. It's on our NASDAQ. And we've got ASND. Tour Lifestyle Holdings. All right, what can we see? Yep, shares outstanding, consistent sales growth, and net income per share is increasing. We're on the NASDAQ, and we're looking at ATAT. So even after I've got this list, that's going to be the point where I start doing the 5-minute check on each one of these stocks, just to highlight a little bit further, like, are these short tabled list, is it going to be worth me having a look at? All right, so this one is a little bit less interesting. So sales are starting to taper off by the look of it. The growth is starting to slow down, and that's affecting the net income, which looks like why people have started to wind back on it. But this is just in the last 6 months. So interesting. Not for me at the moment though, so we'll leave that one. Aurinia Pharmaceuticals. All right, so we've got shares outstanding has decreased, sales is increasing, and net income. Not much of a trend there, buddy. These businesses, PE is 7. All right, we'll give that one a sticky beat. NASDAQ, and it is AUPH. Now, this one looks interesting for different reasons, namely that it's had significant sales growth, it's had some positivity in terms of net income, and it doesn't really look like it's really taken off. It does have a price to earnings of 7, so people aren't anticipating it's going to have growth. It looks like they're anticipating it going backwards. So that could be an interesting growth story. Gold and silver. All right, another gold and silver company. All right, you know what? Stuff it. All those ones are getting kicked off the list. Like I said, they're cyclical. They're not going to be the greatest long-term holds, and that's what we're focused on at the moment. But there is a lot coming through, and for that main reason. Now, I did cover this business in a previous review, California Bancorp, and it looked like it had had a few ups and downs. Sales is increasing a fair whack, and they've been consistent just only in the last kind of two years over the shares outstanding. The thing with the information that I've got at hand, gonna have to let this one ride. Oop, back to the screener. Booking Holdings Inc. So what do we got here? So sales increasing. They have been decreasing shares outstanding, which is good. Earnings has increased. So this is a good sign as well, with the exception of the previous year. So a business that can generate a fair whack of cash. This would be an interesting one to have a sticky beak at. You know, they might start to get to the stage where sales are still increasing. You know, they've still got generating cash, but they go and slap that straight on reducing these shares outstanding. And what are we talking? It's a large. BKNG. BWLPG Limited. All right, so oil and gas, or LPG, oil and gas midstream, Singapore, mid on the NYSE, and inconsistent income, sales, looks like it's flattened out. Not interested because energy, especially like oil and gas, is very much commodity. What do we got here? Ooh, China. Mid on the NASDAQ. So what do we got? Consistent growth. They are doing small percentage of shares outstanding to try and either grow the company, but earnings per share is increasing. What do we got? A mid cap, 6.3 million. I'll have to add this one to our list. NASDAQ. BZ. So I'm just going to poo-poo it. I've always got, in terms of different areas and emerging markets, there's different risks and things like that. So just got to be wary of how accurate some of the reporting on some of these things are. Obviously, even US companies are involved in fraud. So just got to be mindful of, really, it'll come down to the next couple of screens, which is management and if I trust them or not. All right, CompuGen, cover this one in another one. Let's just have a look at how this one fares. So sales has obviously increased a fair bit, but our earnings per share or net income is all over the shop. Now, could be one to keep an eye on later down the track. The price to earnings is fairly low, which means that it could be an interesting play, especially if we're anticipating a bit more growth. So I'm going to add it down just for that kind of reason, but it's going to be off to the side. So NASDAQ comp or CGen and value. All right, screener, CPA or Panama. All right, now sales, it's had a bit of growth. Earnings per share, pretty flat. Shares outstanding, not really interested. It's not jumping out. And hallelujah, we have made it to page 2. Now I just got to be mindful of my battery because this computer is still playing up. Whoa. All right. So Credo Technology Group. A huge sales increase, which has led to huge earnings per share growth or net income change. And we are looking at shares outstanding increasing. However, the amount that's actually come through from that is pretty insane. So I can see it's also semiconductors, technology. So it'll be getting a fair bit of lift from that whole technology sector and everything involved in that. Shall we add it? Yep. Now, it has had only the growth for the last couple of years, so it's not going to be high up on my list for review. Cosmetics. So I had a previous review on these guys as well. And what can we see? So share sales growth has increased a large amount. Shares outstanding has as well, and looking at what it's kind of projected to here, looks like it'll be flat. And earnings per share, so net income per share, looks like it's increased, but doesn't look like a lot of growth. Now, Cosmetics, we will add it down to our list to keep on there, but it's going back in with the last one as well, with Credo, for that reason pretty much. So it's on the NASDAQ, CRMD. It is a bit speculative because we want to make sure that if this business can actually increase and reach more market. Now, an extremely small stock. And shares outstanding is consistent. Sales is all over the shop. And same with earnings. So not interested. Sorry, buddy. Dave Inc. So to have a quick look at what Dave is, and yeah, it looks like an interesting stock. Earnings per share or net income per share increasing and sales increasing as well. It's a really good trajectory. And we're going to add that one to our main list of stocks. And we got, makes it an easy ticker to remember, NASDAQ and Dave. Dosibo Inc. Canada. Canada. Sorry, Canadians. All right. Shares outstanding, consistently decreasing. So that can usually be a pretty good sign. Sales is increasing and earnings per share. So it looks a little bit funky. Software application, Canada, small. I think I'm going to keep this one down. So what I want to see when I look into this business further is it's a really awesome for a business to be plowing its cash if it doesn't have any other growth opportunities for that cash to be buying shares back. And so over time, that can be a awesome business to own because if you buy in at a good time, that your little piece of that company actually grows over time as well. So it might not be the amount of growth in net income per year you get, but if that business can keep smashing the cash flow, your piece of that company will increase over time, and it's compounding as well. Shares outstanding, not really keen. Sales is all over the shop. Same with the earnings. So sorry, buddy. DeFi's not coming along for the ride. DLO. All right, earnings per share is good. Shares outstanding. Sales increasing and earning or net income increasing as well over it is going to be lumpy in times. We want to see how that's going. Software infrastructure, Uruguay, mid-cap. All right, let's slap it down on our list. You made the cut. Good on you, buddy. Duolingo. Yeah, nice. Oof. So we can see what expectations and not meeting shareholders' expectations can do to a stock price, because they've had huge growth, and then that some people have expected that to remain absolutely huge, but sales is continuously increasing. Weirdly, they are doing shares outstanding has been increasing. Whether that be just internal, so like common shares being issued to management in the business. That could be it, but we want to have a look into this one further. It's interesting that they've only been cash net income positive for the last 3 years, but we'll slap him down because you have a bad year, expectations from other people and other investors can drop, but if you can see the business continuing that growth going forward, you are the winner. Euro Seas, marine shipping, Greece. Earnings per share, sales, not really punching in its weight class for the best, so we'll slap that one. Eaton, we've got sales growth, like a fair bit of that. Shares outstanding is pretty constant, but earnings per share is so pretty low net income. PE ratio is 162, so people are expecting huge things from this business at this point in time. So it hasn't really proved itself to me in being consistent in terms of being producing net income. So dropped from the list. FTAI, aviation. Similar for this one. We've got really good sales growth. However, earnings per share, net income's been all over the shop. And what are we talking about? People are expecting big things from it, especially when previous year was the largest net income, which is what that PE is based off, which, can lead to people being extremely disappointed. Flowtech Industries, really good sales growth. Shares outstanding, not really keen on that, and not really much going on here. So chuck from my list. Futu Holdings. All right. Shares outstanding, sales growth is good, and earnings per share or net income is good. And we're going to slap that one down. It's on the NASDAQ, and it is FUTU. Simple minds, guys, so just stay with me. Galliana Gold, I'm just going to skip over it. GigaCloud, heard a little bit about this one. Oh, look, it's got a double top. Wow. Now, why might this one be interesting? Consistent sales growth, consistent net income growth per share, and it looks like they're decreasing shares outstanding. So that is the hallmarks of a great business to have a sticky beak at. It's also a small, reasonably small stock. So GCT, it's on the NASDAQ, it's down on the list. Galliana Gold, Global E Online, Internet Retail Israel, Consumer Cyclical. Blech. Right, sales growth, but not really excited about that. I mean, if you enhance on it, it's turned things around a bit. It's got double the growth for Rev, but they can at least go one more year. It would be nice. Might see it in future. Globus Medical Inc. And what have we got? So we've got consistent sales growth. We don't have consistent net income. So the question for me is that a sign that the business is spending a lot in different areas to get this growth? And is it investing for the future? Or is it going to have many ups and downs? Healthcare, medical devices, large cap. I think I'm not really interested. It's going to be rough, but if we see it in the future, we'll come back to it. Halozyme Therapeutics Inc. All right, consistent sales growth, shares outstanding is decreasing, and earnings per share, net income is, I don't know, like the general trend is that it's increasing. It is pretty lumpy, and so that can throw off other investors, which can be an opportunity, if this business is well run, it can be an interesting buy. So I'm going to slap that one down. It is on the NASDAQ, and it is Halo. And Robinhood Markets. Well, not really a fan of the old Robinhood. Shares outstanding, just for originally back on its business model. It's a little bit deceptive tactics and shorted their long-term vision for it. But anyway, shares outstanding, consistent, sales is increasing, and earnings per share and income is increasing as well. So look, I don't even know who's running this one anymore. I'm going to put it down on the list, but look, spoiler alert, management is a very significant filter for finding long-term businesses, because really management are the custodians of the business, and we're giving our money in trusting them to look after it and do what's best for us. If we know that they're pretty deceptive and they're pretty ordinary managers of the business, that ain't good. All right, so this business, super consistent sales growth. Earnings per share has been pretty consistent since they've been turning a reasonable profit, and they're potentially plowing that money back into the business. So I'm liking that one. PE kind of looks like people are falling off the bandwagon, but I don't know what these guys do. Healthcare, Harmony Biosciences. So I'm hoping it's not Harmony, the what do we got? Yeah, whatever you call it, dating or whatever thing. So I think we're going to cut that there. I've got enough battery that I don't want to cut out and suspend the rest of the video. That would be a bit of a shame, wouldn't it? So let's have a bit of a summary what we've got thus far. So we've got up to number 40 of these stocks out of our 94. So what have we done? We've gone from 11,601 down to 94 with these filters. Sales growth over 30%, over 10% for net profit margin, and at least over 10% return on invested capital. How many businesses do I have? We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So slightly less than half of the businesses on here we've just been able to kick because they're inconsistent at this stage. And that's just a first initial look at them. And so I think going over 40 stocks like that in, how long has it been? Probably about 20 minutes, half an hour, is a lot more useful for our time, especially as individual investors. We should be pretty picky with what we're looking for, as long as we know what we're looking for. So I hope that helps. Tomorrow I want to go through the rest of these. So we'll start on page 3 and go from stock 41, hopefully through to 80. We can see that there's a couple of stocks on here that hit our interest. So like obviously Nvidia, we've previously gone over Nutex, and we've got Kinsale Capital as well. So some interesting stocks in there, ones that I haven't heard many people talking about as well, which should be good for us to find stocks that no one else is really looking at. So thank you. If you want to see the rest of these and see the results at the end of the day, when I start doing the deep dives on these ones, feel free to subscribe. Like the video if you stuck around for this long. Appreciate it. Let's other investors like yourselves find this video and find the channel and hopefully help them on their journey as well. All right. Otherwise, have a great day and check out this video because YouTube thinks you like it. Cheers.